Alright, so we're approaching first target here over on the... We're looking over here. There's a lot on screen. So first target there in the NASDAQ. We got short at the value area high on a 223. So what is that? Is that a turn? And then the ES in SIM is also short. And then it has hit, it's hit 4 ticks and is at entry -2 now. And then this other experimental NQ down here actually got long rather than short and took a loss. So the live account is now trailing by 20. This back here. Okay, so +5 and +1.5. All right, so we were talking about we'd like to see that head down to the point of control, which is way down here, and unfortunately we got taken out on this pullback here. And you could probably make an argument that the buyer stepped in at that support level right here. Took me out, and then it rolls over and goes nicely. So yeah, this is kind of the perennial discussion we have about trailing by 20 or trailing by 30. In this case, even 30 would have gotten taken out. So I guess there is no debate there. We need a new signal, because if you trail by more than that, you end up giving back too much too often. So we can cry in our coffee here, but there's really not much to do about it. ES is still short, so adverse target and trailing now. This is ES is SIM. All right, so here we are at the end of the day, and let's see what happened here. Okay, so I think we saw this live. This is right after 6:45 when we start here. Hang on, my music's a little loud. And so we took the short here, and one of those cases where there's just a little bit too much of a bounce before it falls lower. But you gotta like the signal here. And then what happens? We fall some more. Here, we talked about this in the room. That's a 151, which is a long signal off this break. So the prediction is that this break is going to fail, right? The break lower will fail. And this is a problem that we see with the thinner markets, where the length of time it takes, or how far it doesn't turn on a dime. The market wants to turn and it slides a bit, and here it slides a little bit too much, because what we do is one of the filters we have to help separate the signal from the noise is that we require a bar in the direction of the trade. And so here, we'll look for 2 more bars. So this bar, the signal bar, is down. Okay, so the next 2 one of these has to be an up bar, then we'll take it. As it happens, it's the third one here. But that is picking, the bottom of that fall right there. Something to think about. Nice big move too. Then we catch the top. All right, so 201 is a turn signal, and we get 5 and 8 3/4 there on the 20 tick trail. Now, something to pay attention to, all right, is this is a good exit right here. All right, I'm happy with that exit because the market turned around hard, it didn't fall apart. Over here, I was unhappy with my trail, right? Because the market fell, and you don't know what's going to happen, and so the problem is the human mind, the way it works. I'll remember this painful one here, and then not remember this happy occurrence here, and that skews my thinking. So this is why you've got to take a data-driven approach to how you choose to trade, how you choose your trades. Let's see here, and what I've done repeatedly is done the test to show that the 30 tick trail is less profitable than the 20 tick trail. It just is. even though this happens here and it's just incredibly painful. It's like stick a screwdriver in your ear painful. Over time, it's more profitable to do the 20-day trail. And it's because of this stuff here. This is exactly why. There's enough occurrences where you get a decent move, but not a huge amount, and then the market turns around on you. All right. Let's see, anything else here? So then we break out of the value area here. Okay, now this is an interesting case here, because normally at the value area we would expect to see orange bars. The orange bar means I'm going to make a prediction. This is a location that I've decided is advantageous to me given the way the profile is built. But because the point of control has moved up, there's been enough trading now, actually, right at this bar here. There was enough trading at this price level that the point of control moved up. And so now this point of control is too close. It's too close to the edge for me to take a trade there. All right, so I just wait, and I end up missing this nice break. I do get you can see it goes orange there because now I finally got far enough away. And it's curious the way this works out. You advance and then you pull back. That low volume node forms, the red one. You have to ignore the yellow dash. That's the current profile at the end of the day. The red line was the low volume node when this bar drew. So I like that. I really need another bar to understand that there's a pullback there. So this is the couple times I've seen this now where I get a pullback towards a low volume node, often on a break like this, and then I don't get close enough to it basically to get a signal. All right, and then we kind of grind higher here. This is a little ugly here. Certainly one of these cases where, these are really deep pullbacks. So any entry, like a lot of people would take an entry on this break right there. This is pulling so far back, you're going to continually get taken out. So this sideways to slightly higher grind is rough. You'll also notice the striping is occurring now. Here, 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 here. That's because we're outside the value area. So now we start using the locations of these waves to identify if the market is choppy or not and sideways. When we're inside the value area, we don't do that. We just use the point of control as a way to tell us where to stay away from. When we get outside the value area, though, we don't have enough volume out here to help us make that decision, so we use the wave points. We don't get much more opportunity in the morning, and then so much trading occurs up here that the value area moves way up. That moves up to the high of the day. All right, so now we're back inside the value area here, all sort of rotating around the point of control. So all this is really dangerous and unpredictable, difficult to tell which way it's going to go. So we're going to stay away from there. And then we finally break up higher here, right at the end of the day. 1240 is when I would stop. That's that bar. So there's nothing left anyway in this case. So I needed to find some kind of entry down here. Here I'm too close to the point of control. So all this is too hard to do. Okay, so that's it for the day then. 20.25 points, which is, what is that in dollars? 405. The ES netted 1.25. Let's see. We're using a new potentially noisier model here. Let's see what happened here. So we shorted here, got 2 points, and then 2.25 on the trail. That's there and there. And then let's see. Okay, that's a 251. So that's, I think this break is not going to succeed to get short. Okay, so which is wrong here, right? The order flow looks like it's going to revert to the mean, and instead it's breaking out. Okay, so we get a loss there. You're into this purple striping, which means the market looks sideways, and you can see why. It's pretty obvious why here. Okay, so nothing's going to happen here with all those codes. Let's see here. This 287 up here, which picks the top, it's a beautiful signal, but it's really aggressive. So we don't take that. So we miss that nice fall. We fall through the point of control all the way down to the previous day's low, the overnight high. And there's a low volume node right. Let's see, there's one right there. So we're starting to make predictions there. And then we're getting short here and making a little. We don't make anything because the market moves enough for us to move the stop. So we only lose a half a point per contract. So for a full point, and that's it. That's the day. Oh, I see. We're this low volume node right here, this orange one here. So for those, if you're curious, what the system is doing here is it's tracking the low volume nodes in real time. So, but I only care about the ones that are nearest to price, because that's I'm only going to make a decision on the current bar. So, if what you'll see drawn for every bar is the low volume node above and below price. So at this point right here, that low volume node is below price, right? So all these bars here, right? And is there one above? And there isn't one above. So that's the only low volume node in play right now, this price level at 63.25. You'll notice right there that same line turns to orange. That's because the price fell below that level. And now that's the nearest low volume node above price. It's the same low volume node, but just the way the logic of the study works. So what I'm doing is I'm looking, is the current bar near a low volume node above me or below me? And then if it is, take some, do some machine learning action. All right. What happens in this case here is there's enough trading at this price level as it moves back through here that this low volume node disappears, but a new one forms up here. And anyway, so that's why these bars are orange. And then as we pull back up to that level, we start making predictions, and we predict the short. It's really choppy and ugly through here. So we get, how much do we get? 3, 6. So we get 6, and then I move the stop to entry -2 if I get +4. So that's what's happening there. So just a couple of opportunities here and netting a 1.25 here. So just covering costs really. Okay, and that is it. Oh, the only other thing here, and I don't really have time for this right now, but this here, here is a -10, right? So this is down in the lower left is a simulation of a different model, a different machine learning model running where everything else is the same as over here. So today you could see it's a full 30-point difference. So thus far this experiment is not panning out. So far it's been that way most of the week. So it's telling me that the direction I went is not necessarily the right direction. It's not a statistically valid sample, but certainly there's a clue there that the deviation, the change that I made to the model is it certainly wasn't a major refinement. It appears to have been just going, headed off in the wrong way. We'll see. It's Wednesday, so we've got a couple more days here. There's actually underneath the covers here. There's a major test going on in the ES world related to the wave size. So this has performed reasonably well last week, even when the last week was really an odd week. And okay this week, not great. And I'm using that to help drive the next major set of tests that are going to occur in the ES. Because of the method that we're using here now, where we're tracking the volume profile and the low volume nodes at every bar, it's very compute intensive to do replays, which means it's a fancy way to say the replays take a long time. So it's much harder to just tweak something and test it, tweak something and test it. That iteration takes a long time now, as opposed to a quick turn. So we have to be a little more careful about how we go about deciding what it is we're going to test. So this is what's happening here. This week I made a slight change to the model, and we're going to compare that to last week and make a decision on which direction is right, and then commit some machine time to doing some formal back testing. All right, that's it for today. I will see you